Hi traders. So you may have heard there is a US election on this week and we finally get to find out hopefully who the winner is. Now it might be a little bit different this year, unfortunately. Traditionally what would happen is we'd get the results by about dinner time on Wednesday in Australia. But with a record amount of mail ballots being sent in, it's possible that this could drag on, and that's going to be a nightmare for those seeking volatility, but we'll dig into that shortly. Now, this is Matt from City India, obviously, so we'll be looking at my trading watch list for the week. But first, we'll have a quick look at the calendar to highlight some standout features. Obviously, we've got the presidential election. That's hands down the biggest event of the week. Got an RBA interest rate decision on Tuesday. Now, there's pretty much zero chance of them cutting rates, given that consumer prices and producer prices are both hotter than expected last week. There's no reason for them to remove the hawkish bias from their statement. And if anything, there's probably more of a case for them to increase the hawkishness in their underlying statements. So that could be positive for Aussie dollar bulls. And keeping in mind, it's already sold off for the past 5 weeks. I do think it's a little bit oversold. I think for once, ISM non-manufacturing probably isn't that important, given it's going to be happening right around the election. You've got a 25 basis point cut expected by the Bank of England. Not sure that that's too relevant. And of course, we've got the Fed meeting. Now, as I will just quickly show you, if we look at positioning on Fed Fund futures, they're pricing a 98.1% chance of a 25 basis point cut. Therefore, there's very little room for surprise if they cut rates. If there's any surprise at all, it has to be the Fed not cutting interest rates, which I think is unlikely. But they might have a slightly more hawkish message, given that economic data has been stronger than not in recent weeks. And there's also an 80% chance, apparently, of another one coming in December. Of course, what complicates it slightly is what happens around the presidential election, because Trump is deemed to be more inflationary. So that could actually be bullish for the US dollar, weaker for commodities, and possibly even Wall Street over the near term. Now, as we get, from the Fed press conference, I guess the most bullish scenario there is if we look at, say, a Trump win alongside a hawkish message from the FOMC meeting. But let's first just quick look at the presidential election. Something I tweeted here on Tuesday. Now, there's lots of polls and lots of betting markets telling us which way things are swinging. The fact is, nobody knows what's going to happen until the day. So we have seen time and time again that polls have been very, very wrong in recent years. And markets have been paying a lot more attention to betting odds in recent years because they've been better at predicting it. However, I now believe we're at a stage where there's a lot of vested interest in the bookies making up the numbers to a degree, depending on which way the company is leaning. And I tweeted this last week because apparently by the peak, Trump had a 65% chance of winning. I don't think it's ever been that much of a landslide. I think 50-50 is a lot closer. And in fact, if you look today, those odds have changed. It's now 52% in chance of Trump and 48% for Harris. But really the basic playbook here is if Trump wins, that's going to be quite a worry for geopolitics in terms of trade specifically, when he's looking at slapping China with a 60% tariff, and that's going to be bad for the Australian economy. So I think a Trump win will probably be bearish commodities, bullish dollar, and near-term bearish for Wall Street, whereas a Harris win would be the opposite of that. I think you could see a weaker US dollar, stronger commodity rally, and indices possibly not hitting new highs because Harris has won, but simply they're just returning to their trend and getting back on with it. So let's get to the watch list. First off, actually, let's backtrack a little bit. I did look at positioning. It's quite an in-depth article you can see online, and looking at how markets traded around the election. And we'll post a link out to you later. But essentially, there's a couple of interesting patterns that struck out. The main one, because we're at T-1, this is today, Tuesday is election day, and T+1 is Wednesday. And typically you find today that on average, indices across Europe, Asia, and US tend to rally into the Monday and the Tuesday close on election day. Now, given we've seen some sell-offs last week, we've got some indices holding support levels. Perhaps you could break the presidential election down to 3 stages. There's before the election, which is where we're at now. There's the election day itself, and there's the aftermath. Now, the hardest one to predict, I would say, is election day. The easiest one might be today. We can see that for whatever reason, I think stocks do tend to rise into that election. So using that as a starting point, let's pull up some charts of US markets. And we've got this SP 500 daily chart here, futures market, and you can see we've got this really aggressive sell-off. Yet on Friday, it held above the low of that aggressive down day. But you've also got the October lows here, and you can see there was 3 lower wicks holding above that 57.24 level. So for whatever reason, there's a decent support level down there. You've got an inverted hammer on Friday, and you had a very oversold RSI 2 as well. And given that we've got positive expectancy for stock markets heading into the election, I'm liking the look for a cheeky long ahead of it. So here you can see we've got a decent buy bar already on the 4-hour chart. What I'd love to see is maybe a bit of a pullback towards Friday's lows, and not looking for anything heroic here, just trading within the actual range. So seeking dips around support levels. You can see that there's multiple failed attempts to break that October low, and looking for a rise maybe towards 5,800. It could potentially break above there, I guess, if Harris takes the lead by a decent amount ahead of the election. But really, I think you're just looking at each day at a time as we get to the election. And as that unfolds, just do keep in mind that volatility tends to pick up after on the Wednesday for Australia after the actual election. That makes sense because that is when all of the results are pouring in. Of course, the potential scenario here as well is if we don't get decisive results in time on Wednesday, then we might not be seeing these volatile moves. That would be unfortunate, of course, but that's just something we need to be prepared for. And therefore, I think it's okay to not trade if you're not seeing the setups there. Going to the next one, we've got NASDAQ 100, very similar scenario. Now, first off, just keeping a look at the weekly chart, we've had, you can see this very aggressive bullish bar, and each week it's kind of making greater effort, or less effort, sorry, making harder work of trying to rally, and you've got this nice bearish outside week. So I think this ties in again to what I was saying, where I'm looking for a bit of a cheeky bounce, looking for somewhere around the lows, hopefully to get in a better price. Maybe we'll get back up to the October VPOC. That's the most traded price in October. But then when you look at the weekly bar, it wouldn't be impossible to envisage maybe a lower stock market in a few weeks from now, and this being a swing high. Now, I'm not making a prediction on it being a mega high. I'm not overly bearish on the US stock market, simply because the economy is really strong. If you've got a strong economy, then you've got strong forward earnings, and that tends to be beneficial. But of course, the key level to really watch here is 20,000. For now, it is holding above 20,000. Any dips towards it look attractive to my bullish eyes. You've also got 23.6% fib level there as well. If we could cheeky move up towards 2450 ahead of, or maybe into Tuesday's close. This is not my watch list. I'm just scrapping that as too choppy. That's the ASX 200 futures chart. Another theme, I've mentioned this last week, and it still stands. If anything, being bullish on China now has just become stronger for me. I'm going to refer to a tweet I did on Friday, and you had China, I think it was the final manufacturing read for the cakes in, was actually upgraded to a very mild expansion, and that's 50.3. Over 50 is an expansion. That's obviously very mild, not particularly mind-blowing. However, you did get a full point rise, so that's the fastest rise in 11 months. Now, if you look at, drill down on some of the data within the PMIs, you've got manufacturing. Yes, they're all still contracting, but at a much slower pace, and it's not absolute terms always you're looking at, it's the relative shift. And when I look at these two, you see that they're all curling higher on the services, and they're curling higher on manufacturing as well. So it looks like they will actually get more expansive results as time goes forward. And keeping in mind that this data didn't really capture a lot of the stimulus that's been announced. So I think the actual fact, as we get towards the end of the year, I think China looks a lot more attractive. Now, let's say that we do get a big sell-off on Wall Street. Notice this is, look at the correlation between the SP 500, sorry, the ASX 200 and these markets over here. And in recent times, the correlations on the 3 days are extremely high, completely inverted though for China. So if we do get a big sell-off in sort of US, Europe, etc. I think China on a relative basis looks a lot more attractive, and that takes you back to this chart on long China A50 futures. And again, you've got this, I think it's a 48% rally over 13 days, handed back around half of those gains, but it did find support around 13,000 and the 61.8 Fibonacci level. We've also got this very strong buyers bar, and that to me looks like corrective price action that follows this bar. So I'm just looking for a movement higher towards 14,000 or 14,220. I think we've seen enough of a consolidation. I don't know what the trigger will be when it will happen, or even if it will happen, but I'm satisfied that I've seen enough of a pullback to feel like a bit of a punt, and that for whatever reason, markets have not caught up with the positive data that came out last week. So maybe they're waiting for the election to see what happens. But that, again, is if we see maybe get a Harris win, I think that will be risk on for commodities and indices, and we might get a sigh of relief from China's markets, and they might even rally as well. And of course, if you're looking at China A50, you could also look at Hang Seng. I find the levels on these aren't as nice, but the structures there, you still a very strong rally. Bit of a messy thing, but again, it could just be a cheeky punt, maybe up towards the highs, maybe 21,600 even. And of course, if you're looking at a commodities rally, copper's looking really interesting to me at the moment. It's just hugging. Look how well that has respected that 200-day average. When you look at the weekly chart, you've got this aggressive move higher. You've got a multi 4-week sell-off, and you've got compression there. So you've got this inside week. And now it's trying to build up towards now today, tomorrow, day after. No idea, never do. But for me, any movements towards these lows of the 200-day average is getting snapped up. So I think it looks good for a cheeky swing trade long, maybe towards, I think in terms of potential targets here, you could look at the easier levels. You could see this gap here between 4,500 thereabouts. I think that's a sensible one. But if we do get a broad risk on rally, that we could even be heading back towards the July highs. We'll look at the dollar index because obviously it is important. It is looking like it wants to retrace. Now again, a Harris win would probably be a bit of a pullback for the dollar. A Trump win could be positive because his policies are a lot more inflationary. So that would indicate that the Fed may not be inclined to deliver such a dovish cut this week. And under the right scenarios, if the Fed were to completely surprise us but not cutting, or give us quite a strong hawkish message and a Trump win, we could even be looking at 105, 105.50. That's not my bias, though. I think we are looking for a bit more of a pullback and towards the 200-day average, around 103 on the dollar index. And that would tie in nicely for the bounce on the Aussie, which I'm quite pleased to see happened because that was my bias in the Aussie dollar outlook report sent out earlier today. And be a good time to refer to the weekly COT report to explain this one. If you look at, so this is the weekly chart of Aussie futures. And what's interesting is whilst prices have been moving low for 5 weeks, over that period we've seen less speculative volume. I'm assuming that's because they're just traders de-risking. That means they're closing longs and shorts. Whilst that's not a compellingly bullish case, it's also less of a case for a bearish setup. And because you've already seen 5 weeks lower, I think we're at or near inflection point. And I do like that buyer's bar. Now, with any luck, maybe we'll get some sort of a gap fill towards here, but any pullback towards that weekly VPOC or even towards this gap area down here, I would be looking for potential long setups. And upside targets include weekly lower value area, but also I'm looking for a move to the weekly VPOC and this 1 week implied volatility level around 6680, 6690 thereabouts, which actually also sits near the 200-day exponential moving average. Also the 100-day, my apologies. And if you're looking at long Aussie, then you might as well look at long Kiwi. And when I put up the Aussie Kiwi chart, it's not really giving a signal to suggest one's going to be stronger than the other, but it's watch your preference. And I do like the fact that we've got this pretty straight move lower, but you can see the second half of that move was losing momentum, which produced this bullish divergence. And we held above this weekly close down there. You've got this small doji that failed to penetrate or close beneath it. And since then, momentum is pulling higher. So any pullbacks to me look attractive, but this is a kind of market that could rip when it really wants to. We've got too many people in the same trade here going short. And I think we're going at least towards the October VPOC around 6050, 6060. But we might even get some mean reversion up to the 200-day SMA or EMA around that 60-10 level. This one's come out quite well. We discussed this last week, and just looking at how the long-term trend line was respected, and that for whatever reason it just didn't want to go beneath the August low, and we're already now on track for a daily close above the 200-day simple moving average and possibly even the exponential. It appears to me that market wants to rise into the election at this stage. So will we get a pullback? I hope we do again. Here's the weekend gap. Any movements towards that might help us position ourselves for a bit of a move higher. But I think we could be looking for a move at least up to 38.2, around 109.35. Gold is interesting, and we need to refer to the COT report on this. Actually, just before I do, the other thing for Euro is that large speculators were net short for second week at the most bearish level since September 2022. Given that they've been generally wrong a lot recently, large speculators, I'm using that as a contrarian signal. And also notice asset managers, they barely budged, so they remain net long, and their weekly over week change hardly moved. So this is like real money accounts here are still net long. So whilst you've got a rise in short there, I'm inclined to ignore that and look at this as a bullish setup on Euro over the near term. As for gold, there's also been, it's not particularly bearish, but consider that we've seen this quite strong move, and you'd have to zoom in there, or just trust me that there's like this bearish pin bar there on the weekly chart. But what's interesting is you've seen a rise of shorts in recent weeks from large speculators and asset managers against gold, right? So combined volume, it's gone up to it's 127,000 or 128,000 short contracts against this market, and this data is up until Tuesday, and of course the market went on to hit a new high and reverse lower. So with that in mind, I think at the very minimum it's a market to be wary of longs at these levels. That said, I would probably feel inclined to be fading into moves towards the upper bounds of this candle. You got this is actually a 3-star evening star formation pattern. You've got an inverted hammer, so it looks like the market probably wants to rise into it. In fact, let me just remind myself what happens to gold around the election. Tends to be bullish on election day, not so could that work out? Not entirely sure why that would be, but it's people seem to buy gold on election day. So maybe this isn't the best one, but for me, purely on a technical basis, you've seen the character has totally changed from this very clean bullish move. Now we're putting in big swings to the downside. You've got some big sellers bars. So I think any movement towards these highs, you might be able to better position yourself for a cheeky short. Not looking for anything too heroic, maybe just some mean reversion to the September high or the bullish trend line around 2,700. Just keeping in mind that we might find that gold rises in towards and to the election. Again, let price action be the cue. But what I'd be looking for to consider the short is something like this, where you see prices creep up and then start putting a series of false closes or reversal candles, and then look for evidence of a swing high, and then you anticipate the swing move lower, and I'll be looking for movement down to here. And just to wrap up on Bitcoin, has caught my eye. It's not something I look at all the time, but I think on the near term we might be looking for a cheeky long. However, do keep in mind that it is choppy on that weekly chart. You can see that it couldn't quite reach that record high. Why my line's moved? That's the all-time high there. You've got this bearish pin bar or shooting star candle, and its prices are kind of hugging this high volume node around the 69,400 level. So maybe this is indicating that prices want to move lower on the weekly chart, given that false break seen last week. However, it does look to me like it wants to have a cheeky movement long for now. You've got the 20-day exponential moving average, you've got the pivot point just there, you've had a pullback already, so maybe a move towards 70,000, a break above, bringing that 72.16 high back into play. So as always, hope that was useful. Wish you best of luck with your trading.